Meghan Morris is senior financial reporter for Business Insider, and welcome to both of you. It's good to see you.
Thank you.
Rett, let me ask you first, what was your rating on this company heading into the IPO, just in terms of what you thought about the prospectus and the deal itself?
Sure. The prospectus rated very highly. The disclosure was terrific. They gave us really good statistics, unlike WeWork, Uber, and Lyft, on what their churn rates were, what customer acquisition costs look like. So what it did is it framed up the debate for, is this company going to sell 5 million bikes, or is it going to sell 2.5, 3 million bikes? And that seems to be where the argument was about valuation. Overall, it scored pretty well, 6.9. And I think, putting aside the price chart yesterday, which is an ugly price chart, and you hate to see that, this company's worth $11 billion. So it's worth twice as much as GoPro and Fitbit were, which were both growing faster and were profitable on the bottom line.
They just get greedy. They priced it at the high end of the price range. And the CEO, when he joined us on air yesterday, said he thought they left a little on the table.
I mean, who knows? Maybe they could have done it higher, right? I mean, the range was 26 to 29. They priced it at 29. The market said, no, 26. Right? So the whole debate happened inside the range.
How much is hangover from WeWork, where people just think $47 billion, now it's a third of that? The window for IPOs seemed to close this week, did it not? And even if you're a company that deserves a higher price, you're not going to get it, and you might as well not do it right now, right?
Sure. Well, I think, we saw with Endeavor, right? The difference between Peloton and Endeavor is Peloton got done at the high end of the range, raised $1.2 billion and is worth $11 billion. WeWork and Endeavor said, we'll do this later, or not at all. So the window, I think, is going to be more influenced by the inventory. Like, since Lyft, what we've seen is like 9 really traditional software companies go public. Datadog, Ping Identity, just the most recent ones, doing great. But the misfit toys, the Ubers, Lyfts, the Fivers, having more trouble, and it seems like the market sort of confined Peloton to the misfit toys a little bit yesterday.
Meghan, how much of this is, there are a lot of companies that are out there that are bringing in a lot of revenue but losing a lot of money, and maybe the street just doesn't have patience for that right now?
Absolutely. We're certainly seeing that with WeWork, but I would disagree. I don't think that WeWork is spooking investors on Peloton here. I stopped by Peloton's roadshow last week and spoke to over 24 investors, and almost all of them said that WeWork wasn't influencing how they were thinking about Peloton's path to profitability. They seemed relatively bullish on the company overall, though a number said that they are just not buying IPOs this year. Some of the major wealth managers are not looking to take chunks of these IPOs, given how poorly most of them have performed.
So then it almost is. I mean, it may not be WeWork specific, but it is the effect of all of these other situations out there. And again, if you don't have earnings right now to show, if you're going to say we're going to get to growth or we're going to get to profitability, but it's going to be 3, 4, 5 years down the road or longer, good luck selling that.
And Peloton's not doing itself any favors with certain governance structures like its dual class share structure. That's hurting the number of investors who might buy in, given that some of the investors just don't buy into the dual class share structure right now, seeing how it's affected other companies and the ability of leadership to really move companies forward.
So how does this work itself out and we come out the other side, Rett? Does anyone decide to do anything now?
Well, I think the next Datadog, the next Cloudflare would be fine, right? But the question is inventory. What we've been saying here for the last couple of months is everyone talks about the stampede of unicorns, but there really aren't that many. We've seen WeWork now. We know we're not getting Airbnb. We know we're not getting Palantir. Right, so the bench isn't that deep for companies to come at this point, and it seems like with all the weirdness going on in the market, I wouldn't be surprised if we didn't see much for the rest of this year.